This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And of course, for those of you old enough to remember our now President Trump, that was his theme song from the show The Apprentice, which means today we're going to be talking about my favorite subject, which is called real estate. And for all of you who are there who love real estate, who like, in my opinion, the best investment you can, asset class you can invest in, all you real estate buffs there, please tune in. Simply because everything is changing, and the same is true with real estate. And the question is, how is technology affecting the business of real estate? And I think you may have just seen that Amazon is now in the real estate business. And the question is, what does that mean? And there's crowdfunding now. How do you raise money for real estate? Because that's the biggest thing I always hear about, how do I get the money, And today we're going to find out how technology is affecting, number one, the business of real estate. Number two is the funding of real estate. And three, possibly get to it, is how you manage real estate. Because I think the management of real estate is the hardest part of the real estate deal, unless, of course, you're a flipper. And I'm not a flipper. So our guest today is a dear friend, longtime Rich Dad advisor on real estate, Ken McElroy. He and Kim and I have done many, many deals together. I would say he is one of the primary reasons Kim and I are financially free, is because Ken has a way of doing, we started out doing deals right after, really for a long time now, but when the crash hit in 2008, we thought we died and went to heaven because they dropped interest rates and the prices of real estate plummeted after the subprime crash. So real estate is more than just buying sticks and bricks. And so today we're going to be talking to Ken, who is definitely the smartest guy I know in the world of real estate. And we're talking about how technology, millennials, and real estate and Amazon all come together and crowdfunding. So welcome to the program, Kenny.
Hey, thanks, Robert. Always great to be on the show, for sure.
Well, you add such a dimension, because one of the things I talk about is you got to have real teachers. And a real teacher is somebody who practices what they preach every single day, twice on Sundays. You go to sleep thinking about real estate. So you're the real teacher when it comes to real estate. So let's just start with one quick question. We got this article on how Amazon is now in the real estate business. What does that mean to you?
Well, first of all, it's not surprising to me. I think what happens a lot of times, I watch everything. I read everything every day. As you know, we have acquired over $1 billion worth of real estate in the last 15 years. And so it's not surprising to me. There's a lot of very big companies that are in the space. And, Amazon is just a big household name. So, but from what I read, there's been tons of money that has poured into real estate. It's becoming a commodity. What I tell people is it's no different than what the airline business went through or the travel agency business went through, when it went from, you had to use a travel agent, and then all of a sudden now you can just get a flight, in an hour, basically, online. Everything's moving online. Amazon is just the latest player. They're the biggest name, and they obviously have a lot of money. But there's a lot of money being thrown at real estate right now, and we're starting to see apps, location services. Now Zillow's a household name, but if you really look, Zillow hasn't been around that long. They have a company called RealtyTrack. They have, Realtor.com. And so everyone's moved what used to be, kind of paper pushing to an electronic platform online. Amazon, what they did is they just partnered with another group that was already public, and that group had been acquiring businesses. And so really what they became is the financial arm of a real estate partner. So that's actually what happened.
Either the financial arm or the location arm, you know what I mean, other than the marketing arm.
They're going to do both for sure. I mean, if you read the article, Realogy, they bought Coldwell Banker, Century 21, Barbara Corcoran's company, and they're public. And so what Amazon came in and did is the article says Amazon is not getting into the real estate business. They're leaving that up to the partner, but they're going to help them with the technology and certainly the money. And it's going to be a very interesting thing to watch. And mostly it's going to start off in residential for sure. Obviously, it's going to start off in the single-family homes, which is honestly almost already a commodity. You can go online right now and look at any neighborhood anywhere, pretty much, and find out what it was sold for, what it's listed for. Everything's gone online, which is, in my opinion, it's been really, really great. It levels the playing field for almost anybody. If you can't get rich in real estate now, you're a complete idiot.
I'm still the idiot out there. But anyway, what does that say? Let's say your boys, your two sons, said, I want to become a real estate agent. What would you say to them?
Well, I think what real estate agent means now, you and I, it's interesting. We've traveled a lot together, and we're seeing this also in the financial planning world. John McGregor is, a good friend of ours and fellow advisor, is, he will tell you that everything, even investing in stocks or anything, it's become so easy, and that's why you have all these day traders, et cetera. So I think it's going to be very similar to that. In other words, and so if my kids ask me that question, I would say do it because of the education. There's a lot of rules and laws and things that you really need to know. So it's just, you don't learn about real estate in high school or college generally, unless it has, some colleges have it as a degree, but generally you're not going to have that. And so, digging down and the real estate licenses and the broker licenses, I think is still a good idea because, these are really, really educated. There's a bunch of things that happen, as you know, between sellers and buyers, especially if you're trying to buy something that's complicated or it has clouded title or it has survey issues or it has environmental issues and all those kinds of things. Those are really important things to know if you're representing somebody. But real estate itself is all on the internet now. And so finding deals and doing deals is so much easier, and having the knowledge behind it, that's just the wisdom and the experience,
Yeah, to me, it's still the old school thinking that I still want to see the foundation. I want to see the roof. I want to check out the plumbing and, the siding and the neighborhoods and all that other stuff. So maybe that's just too old school thinking, but there's more to real estate than just the numbers. I mean, what do you think about that?
Oh, 100%. Yeah, sorry. I didn't mean to
No,
at all that wasn't important. That's super important. The due diligence and, the actual physical inspections and all that stuff is really, really, really important. But here's the cool part. Like even my company today, we have about 250 employees. Anything, everything's done now through Yelp and these services that rate contractors and stuff like that. So you could literally, pull up to a house today, pull it up on the internet, take a look at it. You can go on Yelp and find some local contractors, literally call them, ones that are in your local area, have them come over. It's just so much easier and fluid now to be able to find people to do those kinds of inspections and things like that. Even realtors in the areas, they work certain areas, and you can see that. You can you can see kind of who's specializing in certain areas, and I think what is going to happen is, there's algorithms and things that show already, just like buying a car, I don't know if you've ever gone on cars.com, but I've bought at least a dozen cars off of there, not directly off the website, but found different cars through cars.com. It's kind of the same thing where, if you're buying a Ferrari, let's say, I look at the entire country, and so it's kind of the same way when you're looking at a neighborhood. You basically are taking a look for outliers, ones that are too high, ones that are too low, and you're, like you and I, we want to look at the ones that are too low. And so, it's great to have everything on the internet so that you can actually focus on stuff that might be value add, and you can compare, like, am I paying too much? Am I not paying enough? Et cetera, et cetera. And so the realtor, The realtor doesn't have the advantage anymore because all the information is on site. Like when I buy a car, it says good deal, fair deal, average deal, you know what I mean? And it kind of does all that work for you, you know? It's pretty cool.
Yeah. That's amazing because, you know, when I started out, they had this thing called MLS, right? Multiple listing services, and they got these huge books, and I'd have to sit there and look at pictures and scan the numbers and use my brain for a change.
Yeah.
Hey, this is a quick question. I was watching television, and they said, all you have to do now is send us a location of your house, and we'll send you an offer. I mean, how the hell to do that?
I actually tested that service.
I'm sure you would. That's what I'm asking.
Yeah, and it's pretty smart what they do. There are people that need to sell stuff right away for who knows what reason, divorce or sickness or health or job location or job relocations or whatever it might be. So what they do is they just lowball you. So they take the Zillow number or whatever number they use, and they just have a formula. And they trust me, it's a big discount. It's not a market rate. You know what I mean?
Right. So but
it works.
It's sort of what we used to do when we were just starting out. We'd fire 10 lowball offers and hope nobody killed us for being so obnoxious about it. Yeah.
100%. I mean, I know you love to negotiate on stuff, and so it'd be, it's like something costs whatever, and you lowball it, right? I just bought a tricked out Jeep that way, right?
Yeah.
The guy, I offered the guy, like $30,000 less than he wanted, right? We ended up, actually getting it for that. So, it's just that's part of the negotiation. So that's what that is. It's a way for somebody to cash out quickly, but at a big discount, and then that's where they create their value.
Okay. Hey, Kenny, we're going to take a break, but I want to go more into how a big question always is where to find the money, and then now we have crowdfunding, and I want to ask your opinion on how you do crowdfunding, because that's something I would never do, but I'm an old guy, plus I don't have to do that. And then the second question, I forgot what the second question is, but one is crowdfunding, and we'll get back more into property management. I mean, because property management is your strength, which gives you have two strengths. Ross is the bank guy, and you're the property management guy in MC Partners. I think that gives you guys an unfair advantage in that marketplace. And I guess my question is, how does that fit into the new age of technology? We have the property management, which is, as you know, you either make it or break it in property management, but also is the funding, which Ross, being a former banker, gives you guys an unfair advantage out there also. So when we come back, we'll be talking about in my opinion, the two really sophisticated parts of real estate, which is the funding, finding the money for it, and secondarily is how do you manage it? Because as you know, one bad property management and all your profits are gone in a split second. So when we come back, we'll be talking more to Kenny McElroy. He's the author of a number of really great books, The ABCs of Real Estate Investing, which I recommend anybody. How many times have I told these idiots out there? Say, this is real estate. Well, get Kenny's book. No, just tell me what to buy. I just told you to buy Kenny's book. You'll save yourself a lot of pain and misery. So that's his first book. The second book, The ABCs of Property Management, which is, you and I know, is the key for long-term real estate. And then 3 is the Advanced Guide to Real Estate Investing, and that's where I don't hate to use the word trick, but that's where the magic takes place, is in the financing and the whole structuring of the structured finance deal. So the 3 books are ABCs of Real Estate Investing, the ABCs of Property Management, and the Advanced Guide to Real Estate Investing. And I unabashedly say Kenny McElroy is the reason Kim and I became very, very rich when he became our partner about 20 years ago. So when we come back, we're talking more to my partner and Kim's partner, Ken McElroy, and the subject is real estate plus technology. We'll be right back. Welcome back, Robert Kiyosaki, Rich Dad Radio Show, the good news and bad news about money. And we broadcast from beautiful downtown Scottsdale, Arizona, where it's either heaven or hell, and right now it's pretty close to hell. It is hot. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. We archive them for one big reason, is we are a financial education company, which means we don't recommend you buy or sell or do anything. And the reason we archive the program is if you listen to this program again, you'll learn twice as much. It's like you don't learn golf taking one golf swing. The more golf swings you swing, the more you learn. So that's why we archive the program. So you go to richdadradio.com. If you have friends or family or interested in real estate or business partners, please listen to this program again, because our guest today is, for Kim and I, our special partner, Ken McElroy. He's a Rich Dad advisor. Again, his 3 books are The ABCs of Real Estate Investing, The ABCs of Property Management, which is the key, and The Advanced Guide to Real Estate Investing. And that's where everybody wants to get to. I want to do some of those tricks and how you make $1 million and not pay taxes, all those stuff, But you've got to start with the basics. The ABCs of Real Estate Investing, the ABCs of Property Management, and 3 is The Advanced Guide to Real Estate Investing. So Ken's book, they'll make you millions, but also prevent you from losing millions. And that's probably the biggest thing, because real estate is not like buying a stock. The problem with real estate is illiquid. The moment you sign that dotted line, you're on the Titanic. You'll either keep floating or it'll take you down with you. And that's why real estate is much, much different than buying a mutual fund or Apple stocks or something. So once again, we're talking to Kenny. His company is MC Companies, and we're talking about how technology is affecting the real estate business, especially the business of real estate investing. It's different when you're buying a house to live in for consumption, but when you're investing in real estate, like I said, real estate is extremely illiquid. It's hard to get in and even harder to get out if everything reverses on you. So, Ken, any words of advice you want to have for the listeners out there? What's the difference between buying real estate and buying a mutual fund?
Well, it's starting to become not very. The difference isn't as wide as it used to be, for sure. So, what's happening? People always use "I don't have the money" as an excuse in real estate, and that's basically going to be going away soon, because it's so easy to raise money now online. There's a lot of legal issue around it, so you got to be really, really careful. So there's 2 buckets of investors. One is an accredited investor, like yourself, Robert, and then a non-accredited investor. And there's a big difference, and the laws around those are very, very different. And so when you're talking about investing in a mutual fund, most of the time that would be a non-accredited investor. So accredited investors, they have certain things that requirements you have to meet. But now the crowdfunding is commoditizing everything. So you basically can invest through funds online, like Fundrise and Realty Mogul and Ground Floor, for example. And these are services that have been around not very long, like 5, 6, 7 years, and you can invest only $500. And so, like Fundrise, for example, which is the largest right now, they're at $1.4 billion in investments, and these are loans, and they're multifamily developments and office buildings and new construction homes and acquisition loans and construction loans. And so basically they're taking your money like a bank online, and they're investing it, and they're giving you a return that you can invest.
It's almost like a money market fund then, where they actually move your money.
It is, Robert. It's literally a money manager, essentially. Yeah. You're coming in and you're investing $500. Some of them have $1,000 minimums. But the point is that you basically just transfer your money over to this group, and then you don't really know what they're going to invest in. So it's not that much different than a bank, but they're pretty regulated, obviously, just like banks are, and much different than an accredited investor, which is we do $100,000 minimums for those, but this is you can do $500, and I did a podcast on this I have a podcast called Ken McElroy Official, and we brought in a securities attorney because it's super complicated, and I don't think we want to talk about people getting into the money-raising business, but it's what we really should be talking about is that it's so easy to get money today. Like, there's so much money going to real estate in so many different ways. This crowdfunding is just incredible to me that, people, it's literally like investing or putting your money into a bank and then they take and go invest it,
Yeah. Good. And then, like I said, your partner is Ross, and he comes from the banking industry. It's a S&L crisis. Well, they're gone now. But anyway, that gives MC companies a leverage. But also then we talk about property management. And the last time I talked to you, you were talking about you went to this conference and you were noticing how technology was also affecting property management, which is, in my opinion, the hardest part of the real estate business. So what do you see happening with technology and property management?
Well, good point. So a lot of people, like, buying a mutual fund is super easy, right? Like,
right.
You buy it and you walk away and it performs like it performs. Well, real estate is not like that. As you know, you buy a single-family house in the middle of Ohio somewhere. It has maintenance, it doesn't have a renter, it has all these things, it has capital needs and regular ongoing maintenance needs. And so it's not, a passive investment. It's an active investment. So, there's a lot of really, really cool things that are coming out right now that we're implementing in our company around payment of rent, which, as you know, used to be super old school. They would drop off the payment at your office, or you would have an office and they would come in with a check or cash, and, there's a whole system. Now that is all completely streamlined, as you can imagine. So just the collection of money requires almost no time. And it's all direct deposits, or you can take a picture of a check and put it in your bank that day. So the transition of rent and collection and all the way, and which is a property management function, is really, really streamlined, which has been amazing. And same thing on the expense side. So there's all kinds of services and apps and things that we've done for our maintenance that you can imagine. We're tracking anything and everything that's actually going into the property, like a water heater or a plumb, or a washer and dryer or a refrigerator or a carpet or whatever. That's all now done online. So you're getting these these expense reports that are super sophisticated, which has never been done before. But then from a resident standpoint, you can literally text or go on your app and put a work order in for anything immediately. And so the communication used to be so old school, where they would go into the office and say, I have a water leak, or my toilet's running, or whatever, and then the office would write up a work order, and then the work order would be given to the maintenance guy, and maybe they got to it that day or the next day, or hopefully. But now it's instant, just like a text. And so it's really, really, really neat, the sophistication. And so what I was talking to you about is I went and spoke to 1,000 millennials in Seattle about 2 months ago, which is, of course, we were right near 1 block from the Amazon headquarters, and a lot of the folks in there were from Amazon. And obviously Seattle is a very tech city, and so it was very, very cool to hear the way that people are running, hundreds of homes, on an app, with virtual assistants and all kinds of things. Like, the technology is really, really, really helping the efficiency and the customer service for the actual residents and for the landlord. They're outsourcing everything these days. It's pretty wild.
So does that save you a lot of personnel time and money and pay and all that stuff?
Yeah, absolutely. I mean, as you know, my company's been around 20 years, and we came from old school, and so we're wrapping our heads around that. Right? How can we be more efficient? But also not necessarily just to save money at the company level, even though that is the byproduct. It's really about customer service and taking care of the resident. Because if you have a great renter in a house or an apartment, you want to keep them there, and you want to provide a high level of customer service to them. That's really the reason. And just like, I remember you and I have talked about, you gave me that book about automation and AI and how all that's working. It's the same thing in property manager. Just like in advertising, for example, Robert. I mean, we used to when I first got into the business, we used to pull an ad out in the newspaper, and then they started having homes and realty magazines at the corner of Circle K's or 7-Eleven or CVS, and now those are all gone, and it's all online. And so essentially it's all done through blogs and, and Facebook and Instagram and things like that. It's all now on these social media platforms. And so, just even that on how a person looks at a place, buys a place or rents a place online, it's a lot of times it's happening. They don't even have to, like let's say we have something in Phoenix and they're moving from New York. They don't, most of the stuff is done online through virtual tours and things like that. You can do a credit app online. You can have your credit run online. You can have your bank, all that stuff transfer online, and you literally can buy a home or rent a home, and so quickly these days, and not even ever have to even visit it.
But thank you. I got two quick questions. We're running out of time. Number one is, how do you handle that nasty thing called eviction? Because that's a big part of it. And the second part is, have you noticed a difference between millennial renters versus the old guys like baby boomers? Have you noticed any differences there?
Oh, good question. Yeah, so I'll answer the second one first. There's no question. So millennials they require a lot less space. They're pretty mobile. Everything's offices are like Google. They're all outside. People they move around. People don't have offices, and so these people are running businesses and doing consulting work and sales jobs and things like that from their laptops or iPads or whatever. And so they're doing it from coffee shops and we're starting to see things like WeWork and these shared workspaces and things like that. And so that's what that means, Robert, is that the old school, we got 2,000 employees that work in this building, and therefore there's buying an apartment building or a rental across the street is going to be a good thing. While it still might be a good thing, it's not what it used to be. In other words, you don't have people showing up at 8 o'clock and pouring out at 5 anymore. And so these folks can be anywhere they want. And so that, the mobility is a big, big deal. And, if you really boil it down, corporate America has not been very loyal, in my opinion, to our generation or even the millennials. And so they know that. And so they're jumping around. They're they might work somewhere for, 10 months, a year and a half, 2 years, and then go somewhere else. It's nothing for them to go from Seattle to San Francisco to New York to Chicago or whatever. So, yes. And honestly, one of the trends that's happening in the real estate business is these small apartments, studio units of 300 to 400 square feet. Basically, they just need a bed, small kitchen and a bathroom, and that's it. And so those are starting to pop up all over the place, as there's a little bit more mobility.
Good. Okay. And then how do you handle eviction in this thing?
So that's always been the same. It's actually also coming of age, so people's credits, their rental history, and their financial capability. That also, as you start to see with these new credit score services and things like that, that's also become, technology has brought that to a head. And so, believe it or not, it's actually easier these days for us to run credit on people and to really understand whether or not they can pay or not. And so the key to we have 10,000 tenants. We have very, 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 very little evictions because the key is, just like anything, making sure that they can pay in the beginning. And so if you do that first, in other words, what happens is a lot of times when people are trying to fill a vacancy, they rent to somebody through the newspaper or Craigslist or something like that without doing the proper background checks. So those are the horror stories that you hear. But if you just tell a renter, hey, I'm going to run a credit check on you, and they have, let's say, a criminal history or something or bad credit, they're going to run. They're not going to even have you run it. So just say that, and and you'll eliminate 90% of your problems, right?
That's good. So it's you also talk about credit and criminal background checks, right?
Well, we actually do credit, criminal, and sex offender checks. Believe it or not, sex offenders are horrible, obviously, and so if you move one into a property, different cities have different regulations, but you have to notify the neighborhoods, for example, that there's a sex offender living in the neighborhood, and so obviously that can be super disruptive. I've had it happen to me.
You got evicted because of that?
No, my God.
Jeffrey Epstein.
We had a guy. Nice. We had a guy move from Texas, and he's supposed to register in the state of Arizona. He moved into a property in Flagstaff that we owned, and they notified the whole community. Hey, there's a sex offender that lives in this community. It was a 300-unit apartment building. Well, you can imagine the disruption we had.
Oh,
because if you're a mother or a family with kids, and you live next door or even 2, 3, 4 doors down, that's not what you want. So. And so, we ended up moving him out, but he obviously it was because you're supposed to register in the state, first, and then it comes up when you pull their credit and their criminal background check and all that. So the criminal background check is another thing different than credit, obviously. And, but yes, we don't want people that have felons, that are convicted felons and things like that. And we can, decide not to rent to those people.
Okay, thank you. So this is running over time. A quick question. You mentioned Seattle, and Seattle has one of the biggest homeless populations. LA has huge homeless populations. From your position, as being in the apartment business, multifamily business, what's causing the homelessness all across? I mean, wherever I go, homelessness is everywhere. Like in Honolulu, it's just massive. And Seattle is massive. LA is massive.
I know. Well, I grew up in Seattle, so I got to watch it slowly over a long period of time. And it honestly has the most to do with affordability. So Seattle has, because of Amazon, Microsoft, Boeing kind of started it, Starbucks. It's a super progressive city, and it is what it is. It's like Manhattan. It's constricted by water and mountains, and everything is super expensive. And Seattle's now not. It's not undiscovered like it was when I was growing up. So it's expensive. You're looking at $3,000 for a 2-bedroom. And so that is usually the issue, is they can't afford to live anywhere.
So let me ask this question. If you have higher wages, like right now they're proposing $20 minimum wage and all this stuff, the higher the wages, the more unaffordable property becomes? Yeah. So there's a correlation?
Higher wage. I'm a proponent of that. I don't think there's a big correlation. I think what happens is, as just in any market, prices jump and then they fall. And same with rent. Rents, sometimes there's rent growth and sometimes there isn't. And sometimes it goes negative. So the key, what we do, of course, is we try to buy when it's low and try to get that wave in. And so what you're seeing is, the opposite of that. This is the downside of super expensive cities. There's other ripple effects. For example, emergency services for teachers, firefighters, police. They can't live in the city because they can't afford to. And so now that's when you start to see this affordable housing and rent control and, tax credit, those kinds of things are coming into the markets. That's the big thing right now, is affordability. So what we've had a tremendous amount of rent growth. We've had a tremendous amount of appreciation and property growth, and that is squeezing out the people that are locked in on their wages. And so, you're starting to see more and more and more of this homelessness that you brought up earlier.
Right. Well, thanks again, Kenny. And we come back. We're going to go to Ask Robert. Do you have time to stick through? Hang around, get to the Ask Robert questions?
Of course, you bet.
Yeah, because
I'm happy to.
You know more about real estate than I do, so I just be BSing them. Anyway, thank you for this part of the Rich Dad Radio Show. Again, our guest is Ken McElroy. He's agreed to stick around to the next part, which is Ask Robert. So we'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And you can listen to the Rich Dad Radio Show anytime, anywhere on iTunes or Android. And all of our programs are archived at richdadradio.com. We archive them because we're a financial education company. We make no recommendations you buy or sell anything. But we're an education company, and one of the best ways to learn is via repetition. So if you listen to this program again, especially if you're interested in real estate, because real estate is one of those mystical projects that if you buy it and you make a mistake, you're stuck with it. It's like buying the Titanic just before it goes down, and you don't want to go down with it. Whereas a mutual fund is better for amateurs because you can buy and sell. It's very liquid. Real estate is not liquid. The same as a business is not liquid. So real estate takes a lot more sophistication. So our guest today is my business partner, investment partner, Ken McElroy. He's the author of 3 great books, The ABCs of Real Estate Investing, The ABCs of Property Management, and the Advanced Guide to Real Estate Investing. And we're talking today about how technology affects the business of real estate. In front of me, technology makes certain parts easier, but there's some fundamentals that you still must follow. Simply, again, for that same reason, real estate is not liquid. You make a mistake, you're stuck with it. So once again, you can submit your questions to Ask Robert at richdadradio.com, and Kenny has so graciously agreed to stay with us and answer the questions because he knows more about real estate than I do. I always ask the person who knows the most. So, Melissa, what's the first question for Ask Robert?
Our first question today comes from Rusty in Austin, Texas. He says, Robert, are you concerned with possible legislation inflicting rent control and other legislation that would be directly negative to yourself and other landlords? Is your strategy to stay out of those markets, or do you find that there are still good ways to make money in those markets? It looks like Austin might be headed in this direction with all the coastal cities moving here.
Rent control is one of the most terrifying words two terrifying words for me because it means the government becomes my partner in my business. So that's why I'm glad Kenny's on there, because rent control is something I've had direct experience with because my uncle and aunt lived on the Upper East Side of New York City. And thank God for rent control, because if not for rent control, they'd be on the streets. Now, on the other side of it, if I owned the building, I'd be upset because my uncle and aunt lived there for 20-something years. And they couldn't raise the rent on them. And this was a spectacular Upper East Side apartment in Manhattan. So I've seen rent control coming in Los Angeles and other parts of the country. So, Kenny, what do you think about rent control?
Well, I agree with you. First of all, rent control, if you really look at it, hasn't worked. So what rent control was supposed to be is, and there is a need for this, it's supposed to be for people that can't afford rent. And so the government, the idea I think was sound, but what, like in Robert's example in New York, trust me when I say rent control is not right now in New York. It doesn't help people that can't afford rent. It's being passed down generationally, and there are very wealthy people living in rent control apartments. So it just hasn't worked.
So what you mean is they rent it to their kids or something like that, or?
Yeah.
They scam it.
There's these rent control bills. Yeah, exactly right. I think it started out initially correct, and so there's different kinds of rent control. But the actual issue around rent assistance of some sort is actually an interesting topic. It's definitely needed. There's Section 8, which people have heard a lot about. That actually is a good program. There's these tax credits that they give developers to build properties that provide affordable housing inside of a bigger building. Rent control itself has not actually worked. And you do see it in LA. The state of Oregon just passed a big rent control law, and they're working through some of the details on it right now. And so it's a great question, because of rent affordability is a big deal because of this city. We kind of touched on this in the interview with you, Robert. These cities, they need service workers and teachers and police officials and firemen, and they need people that are making less to be able to live in the city. That is a problem, and so these are the issues that the cities are trying to address. And rent control is kind of the buzzword for it, and it's definitely an issue. Certainly in Austin. Austin is super expensive right now. I started buying there in the early 2000s, and so I personally have witnessed what's happened there. And obviously, we made a tremendous amount of money by being there, but it's happening all over the country. And I met with the governor of Arizona 2 months ago, and to talk to him specifically about rent control, because we're even looking at it in Arizona. And and there's ways to handle the affordability issue, and I just don't believe it's rent control.
Good. So as an investor, how do you look at that? I mean, doesn't that put a cap on how much money, the ROI on the property?
There's no question, and that's actually part of the problem. It directs investment away, so it'll be interesting to watch. The state of Oregon is going to be honestly on stage for this issue to see what happens. But if obviously, can you imagine if you're an institution, private equity, or just even a real estate investor, and the state has a rent control policy or law, and you probably are going to pass by Oregon, and move to somewhere else, right? So they don't realize the ripple effects, because I personally would not invest in Oregon until I understood the full law, and because yes, it does cap your income, and that's basically what they're doing. They're keeping things. They're telling you that you can't rent your place for market.
Right, and that's the reason Kenny's third book, and I do recommend 1, 2, and 3, the basics and the property management, but the advanced guide to real estate investment. Rent control would blow apart the debt structure, finance structures, right?
Oh, for sure. I mean, just imagine you buy something. I can tell you for sure your utilities are going to go up. Your
labor,
your management costs are going to go up. Your labor is going to go up. Your maintenance costs are going to go up. Your advertising costs are going to go up. Your property taxes are going to go up. But then the government says, we don't care about the expenses. We're going to tell you that we're going to cap your income. So you're going to have this. People focus on rent growth a lot, but what they don't focus a lot on is expense growth, and that's actually where I spend most of my time. Year over year expense growth is real, and so that's a factor. And so what you want is obviously your rent growth to cover your expense growth. Right. And what they're doing is they're saying, hey, we're going to cap your rent growth or your income growth. Certainly they don't care about the other part. That's the part that scares me. Your expenses are definitely going to go up over time. Then what happens is you start to get into maintenance issues, because you don't have the money
to fix things.
Yeah.
Well, thanks. And then what's the next question there?
Our next question comes from Frank in Rhode Island. It says, Robert, you keep saying there is a huge crash that is imminent, and I don't disagree. I do believe our economy is very inflated. My question is about buying property right now. I just purchased another 3-unit for a very good price of $160,000. I plan on fixing it and bringing it to market value and refinancing it and pulling my money out. If I do this and the property still cash flows positive, would I still be at a serious risk if there was an economic downturn? P.S. I just finished Fake and really enjoyed it, so thank you.
That's great. Very smart guy. The thing about crashes, I don't know what the big deal is. I mean, every 10 years markets crash. And for most people, they live in fear of that. But for Kenny and myself and professional investors, crashes are the markets having a sale. So that's like Walmart having a sale on T-bone steak or something, And if they were cutting the price of a T-bone steak from $10 a pound to $1 a pound, you'd be buying T-bone steak. Well, that's why I think about crashes. But what Kenny has a different point of view on that with crashes versus jobs, right, Kenny? When you look at any kind of investment.
Yeah, and I love the guy I love the fact that he put this example out there. So he bought a 3-unit for $160,000 in cash flows. Well, that just tells you right there that there are still deals out there that people can do. But you and I, we always go to cash flow, period. And without jobs, there's no cash flow. So, you got to follow the trends. And so if you can still buy and there's cash flow, and good cash flow, and you're not super leveraged, I think that, there's still some room in there. But there are definitely markets. I think sometimes what happens, people say, hey, the real estate market's going to crash. Well, I can guarantee you it's not going to crash in Detroit, right? And, it might crash in Seattle, it might crash in Austin, it might crash in San Francisco, but it's not crashing in Phoenix. And so you got to, and then even in those, there's sub-markets inside of those markets that are very, very, very different. You've got good areas of Phoenix and bad areas of Phoenix, and areas that are hot, and areas that are not hot, areas that are being redeveloped, and areas that are not being redeveloped. So there's lots of dynamics. And so the fact that he found a $160,000 place, 3 units and cash flows, it makes me smile, because that means that, what you teach, Robert, and what you've been telling people to do is working. He's going to refinance. He's going to get his money back out. He just needs to make sure that it's still cash flows. But you're right about the crashes. Right now we are having an affordability issue. We are having price issues all over the United States. And that is a potential. At some point, we're going to start to see a ceiling, and there's going to be some kind of a bubble. We talked about this on the credit side, these credit bubbles that are pouring into real estate. So I don't know when, but I think all markets are not the same,
Well, there's something else that, what I sent Kenny this. I should have brought it with me. But there's an article about how pensions are going to drive the next crash, the defined benefit pension plans for the state, for the firefighters, police officers, and teachers. The pensions are going to crash the market. But anyway, I sent that to Kenny, and I said thank you to him, because about 3 years ago, you bought this huge property in Tucson, and then the private equity guys come in and they offer you ridiculous amounts of money for property, because there's so much credit coming into the property market today. So at that point, you began to sell, didn't you? We almost never sell, but they were offering so much money, you had to sell. Is that correct?
Yeah. So we've sold. Yeah, this is a very interesting topic, as this guy is afraid of this crash. Well, so what we're doing is we're selling in. It's just like stocks, For us, we have 40 apartment buildings, 10,000 units. Which ones should we be selling? And maybe we're at the top, maybe we're not, but we've done very, very well on them. So it's dollar cost averaging. That's all we're doing. We're taking some chips off the table, keeping our properties that we think are the best located and have the best debt on them. But what I think a lot of people don't understand is, if a firefighter is working in San Francisco and they're putting money into a pension, that pension has a pension manager. That pension manager's job is to put it into different kinds of investments, real estate being part of those kinds of investments. So that firefighter has no clue actually where their money is actually going. And so that's what that article said, Robert, that you sent me, is it's the same thing really with the banks, except in the banks they're giving you a low interest rate. With the pensions, you're getting whatever the return is based on whatever that pension manager invests in. These pension managers are very, very smart people, but they're giving money to guys like me. We go to pensions to get money for multifamily real estate in the form of construction debt, in the form of permanent debt, in the form of equity. It's just a bucket of money. We don't really care where it's coming from. It's what's the price of the money.
Right.
And so, that's what I think a lot of people don't understand when they put their money into these insurance policies or these pensions. It actually ends up investing, in multifamily potentially.
Right. And the point here is it's a bubble when we had to start selling the junk because it was because we couldn't, we're at the top. We couldn't make it cash flow anymore. So Kenny called up and says, look, we have to sell. And that goes counter to all these flip your house guys because they all want to flip property. And when Kenny and Kim and I met, 20-something years ago, Kenny and I, we love cash flow. We don't flip. So the market is so hot right now in the last 3 years, we've had to start selling our our junk. And that's what these pensions are going into. That's what's spooky.
Yeah. It's just to take it another step, Robert. I don't know if I told you the story, but you'll love it. There was a property that we owned in Houston, Texas. It was a couple hundred units that we bought and we owned for 5 or 6 years, and we had done some work on it. And so we had made some money on the equity. We knew it was worth more, but we were having a heck of a time on the management, squeezing out the cash flow. It was cash flowing, but it was super tight. And it was just, we made a mistake, perhaps on the location or whatever it was, but it was still cash flowing. We had made money. And so that was one of the deals on the chopping block for us. We said, hey, this is something that, on the management side, we've struggled with. We don't see any rent growth here, and we're getting killed, specifically on our insurance with the hurricanes down there in Houston. That took a lot of our profit away, and so we decided to sell it. So we put it on the market. We got it in escrow. There was a buyer. And then, lo and behold, guess what I got? I got the package from the buyer soliciting me to invest in my own deal. So I said it to Ross. It was the funniest thing ever. I go, check this out. Look at this property that we're in escrow with this buyer. And so it's the same old. It's like, oh, yeah, the management sucks. We're going to put $10,000 a unit in here, and we're going to get $200 rent increases. And honestly, I hope they do it. But the point is that we had tried to move the needle on that property. And here I was looking at the next guy's pitch.
Yeah, before he had it closed.
And it was it was like, oh, this is a big value add. And honestly, I hope we just sold that 6 months ago, and I hope it works out for them. But the point is that people invested in that. And I had already tried. So I really, really hope that the people that invested in that property do well, and maybe we missed something. But the point is you can do anything you want. You can paint any picture you want on anything and say it's going to be better next year. And that's the mistake I think a lot of people make is next year is definitely going to be better than this year. And I've always, as you know, I'm not quite the optimist around that. I'm always trying to look at how is next year. If we lose everything next year, what position are we going to be in?
Right. Hey, once again, this is Ken McElroy. It's the Rich Dad Radio Show. I want to thank you for asking your questions to Ask Robert. You can submit your questions to Ask Robert at richdadradio.com. Kenny, thanks for sticking around because, like I said, you know far more than anybody else I know about real estate. So thank you for enlightening people.
Of course. It's always fun, Robert. Thanks for having me on again.
Okay, well, I'll talk to you later. Everybody, thank you for listening to the Rich Dad Radio Show, and good luck in the business. Bye.